Alright everyone, welcome once again to Pips Dojo. So today I'll be showing us a very important trading strategy. That's the CRT model, one of ICT's most powerful trading strategy. Okay, so the CRT model is simply the candle range theorem. I'll be showing you how to trade the CRT model. Okay, it's a reversal trading pattern and it's very effective. Okay, trading the CRT model, what are the things you need to watch out for? How do you trade the CRT model? So first thing you need to trade the CRT model is your candle range. Okay, your range, and you also need to watch out for your sessions. You also need to watch out for key levels. You should watch out for time frame alignment. Let's see. Okay, so these are the major things you should work out for. Now, during your session, let me write this somewhere else. For your London session, feeding the CRT model during the London session, you should watch out for the 4-hour candles, okay, for each candles. And what are the 4-hour candles you should watch out for? Watch out for your 2, your 6, and your 10. Okay, 4-hour candles, 2, 6, and the 10. Now for your London session, okay, for your New York session, watch out for your 6, your 10, I think you're 14, right? I think you're 14. Okay, so these are the candles you need to watch out for if you'll be trading CRT model during the London session or during the New York session. Alright, so with all this being in place, let's check out. Okay, let me also write some things down for your key levels. There are different things you could use as your key levels. Hold highs, that's conserve. Hold highs and hold lows could serve as your key level. Fair value gaps could serve as your key level. Inverted fair value gaps could serve as your key level. Order blocks could serve as your key levels. Breakers, okay, could serve as your key levels. Okay, some would even use previous day high, previous day low, together with other factors. Okay, let me put it together. Twin key levels. Okay, let me name it twin key levels. Twin key levels. Under the twin key levels, you could have your inverted fair value gap aligning with your fair value gap. It's a twin key level. If you have a breaker aligning with your fair value gap, it's a twin key level. If you have PDL or PDH, that's the previous day high the previous day low and the previous day high aligning with a fair value gap, it's a key level. Okay, so on and so forth. These are key levels that you could use in while trading your CRT model. Alright, so let's check out this example on Euro USD. So on Euro USD, this happened just the past week on Friday. This happened just this Friday. Okay, very recent price action, so you know CRT actually works. Okay, the first thing you do, watch out for your timing. Right, your timing will determine your sessions. Remember what I told you, the 4-hour candle. Here we'll have the 6, the 10, right, and the 14. Okay, the last 4-hour candle will determine the session you'll be taking the trade in. Okay, you wait for your first 4-hour candle to play out, close. You wait for your second 4-hour candle to play out and close. Then you take your trade in the last 4-hour candle. When it comes to your time frame alignment for this subject, which is a CRT, we'll be taking the 4-hour. Okay, we'll be making use of the 4-hour and the 15 minutes. Making use of the 4-hour and the 15 minutes as our two major time frames. Okay, now on our 4-hour, what do we first look at for? Now, since our 6 UTC candle has closed, which is basically the candle that will give us our range. Okay, now it has closed. Okay, now we have our range. What do we look out for in the second candle, which is the 10 UTC candle? Now remember 6, 10, right? This is it. 6, 10. The next candle is going to start by 14 UTC. Alright, 1400 UTC. So that means our trade will be doing the New York session. Alright, so we have our range. Then we're waiting for the next candle to mitigate either side of the range and close within the range, just as this candle did. Alright, if that doesn't happen, then you don't have a trade. Okay, just as this candle did, it mitigated the low and closed within the range. Now, when that happens, what will you look out for? You look out for your key level. It must mitigate either side into a key level. When you look at this well, there is a key level here, and what is that key level? The fair value gap. Okay, price mitigated the low of the range into a fair value gap. So yes, we have that. That means in the third candle, 4 candle, which is going to fall during the New York session. So let's go to our 15 minutes time frame to get our entry. Right, let me enable this indicator so you know when the session is coming to play. Coming. I think the network is it's kind of weak. Okay, let's leave that. Okay, so now our first candle, which was a 6, right? The 6, remember it's a 4-hour candle, so let's say it starts from 6, right? This is the beginning, and then it ended, right, by 10, and the next 4-hour candle started by 10. Okay, the second candle also closed by 1400 UTC. Alright, so when the second candle closed here by 1345 by 1400, right, a new candle opened right here, exactly here. Now you have a range. Okay, now you have a range. The low of the range has been mitigated, and when it was mitigated, what happened? There was a market structure shift right here. After the market structure shift, we then look for our entries. Okay, remember, every candle has its own accumulation, manipulation, and distribution phases. Okay, so the third candle, once it opens, we're expecting it to manipulate in the opposite direction first before distributing in the preferred direction. Okay, so and if you look at it well, it aligns with this break of market structure. All right, so now looking at our entry criteria, there's a fair value gap here aligning with this breaker, right? It's a probable entry, but there is also another block here. Okay, there is also another block here. So making use of this other block as our entry, we could literally just find an easy 3 risk to reward right here with just the CRT model aligning with sessions. Okay, aligning with sessions and having good key levels. That's a 4RR trade. That's a 4RR trade. Let me see whether my network is good now. It's still not okay. Okay, let's just continue. This is a good 4RR model. Okay, and this trade was doing the New York session. That's how you could have caught this 4RR trade with a CRT model. Okay, it's as simple as that. These are the things you need. It doesn't get any simpler than this. Let's go through it again. So we have what? So you take note of your range, your sessions, your key levels, your time frame alignment. That's the 4 hour, the 15 minutes. Your key levels are the hold highs, hold lows, fair value gaps, inverted fair value gaps, other blocks, breakers, twin key levels, inverted plus fair value gap, right? Breaker plus fair value gap, previous daily high or previous daily low plus fair value gap. Okay, let me give you an hint, right? Out of all the twin key levels, my favorite is the inverted fair value gap plus fair value gap. It works like magic. Okay, and take note of your London session candles and your New York session candles together, to be able to catch the trade in the volatile period of the market. This example right here was for the London session, right? Making use of the right was for the New York session, right? Making use of the right candles, you could literally catch the same kind of model, the same trade, a trade like this during the New York session, provided the criteria are formed. Okay, so this is how to trade the candle range theory effectively. All right, this is how to trade the candle range theory effectively. So candle range theory by Peeps Dojo. Right, so if you can master this, I'm sure with discipline and patience and consistency, you can be able to find your way around the market and trade effectively and profitably with this CRT model. Alright, I'll see you on the profit side.